All right, good morning, everybody. It is February 14th. Happy Valentine's Day to everybody out there. Hope you're ready to feel the CPI love today. So that's something to be aware of. An hour before the open, we do have inflation data coming out. So that is going to be what I think is going to push the market one direction or another. We have several FOMC members speaking afterwards as well. So could be a volatile day. Could be a day not placing a drum of free trade anyways. Me personally, I'll probably go more at the money today just because of the volatility that may play out and do it that way, but we'll see as the day unfolds. And as for today, I am liking the bullish scenario more than anything, as I'm sure you can imagine why. Right, we had this huge rally up, clean pullback to the daily 21 EMA, confirmed higher yesterday, and now we kind of have this little bull flag breakout that is occurring right there, right? It's triggering to the upside. But whatever news or however the data comes out in roughly 40 minutes can completely change it. It could actually turn into a big old red candle like this. I mean, like, who knows? It's at a very good inflection point based off of the point of control right here. And so yeah, could go either way, but I do like the bullish scenario based off of the daily time frame. And let's go ahead and narrow it down to intraday. So first off, what I wanted to talk about here is I'm going to come on over. So what is the volume telling me? So I went all the way over to February 28th to this area right here. And there you see there's this monthly HVA here. It was a point of control at one time for the 3 months, or sorry, the month prior. And just drew my box all the way across to kind of get a feel for where I can anticipate price to stop based off of that volume location. So it's all the way up here. We'll call it 4,200, and then point of control is right at basically 4,225. So we'll call it. That's where the yellow line right here is, point of control. So that's still quite a ways up. Can we get up there with all this bullish momentum and tone? Absolutely. So that's why I like it to the upside for a 0 days to expiration SPX trade or an ES futures trade. Now, where do I want to get in? Where do I want to get out? All right, so here is my quick hits charts. Ideally, so you can, I mean, the market's up 0.36%. Obviously, been moving up for pre-market, and we're up here at the hourly 30 ATR. Everything is, there's a 30-minute squeeze firing to the upside. Everything is looking bullish, right? I mean, everything's looking great to the upside right now. But how do you pick your entry? So for me, the news is going to come out an hour before. I'll probably wait 15 minutes after the open or so. And it's really going to be quite straightforward. And this is where I think I'll be able to place the highest probability trades for me. So basically, if the news comes out, any type of, say, it does sell up here, and then we get a pullback to the VWAP right here, and then we get buy signals and VWAP holds, boom, I'm going to take it back up to the upside, looking for price to come up here towards 4,200. Now the bearish scenario, that's a lot tougher to do, especially depending on how the market looks when it opens. But at any point, say the market does hate everything that is said, we get this big down candle, it bounces off the 60-day or 60-minute 50 EMA, bounces off of this daily 5 EMA, and then hopefully by that time VWAP and whatnot, VWAP and 30-minute 21 EMA will be right here, and get sell signals and take it back down. I'm basically just going to sell the rally or buy the dip. That's kind of the best way to play it. And since today's news can be a trend-driven day, you can adjust. For me anyways, what I will do is adjust to the 15-minute 21 EMA. I really don't play with the 15-minute 8 EMA. If I miss it at that point, that's fine. To me, that's a very low level of support or resistance when playing. I prefer the 21 off the 15 when it comes to a momentum type driven day. Like I said, if I miss the 18-minute, or sorry, the 8-minute, sorry, excuse me, the 8 EMA, then I'm okay with it because I've seen that one fail more often than succeed. So no big deal in my opinion. But that's pretty much it by the dip sell the rally based off of whatever trend is given after the CPI comes out. So for a quick recap, price pushes up, actually here, price pushes up, stalls, we'll say, pulls back to VWAP in the 30-minute or 15-minute 21 EMA. Boom, buy arrows. Boom, I'm going to take it back up to the upside. Bearish scenario, say that it hates what it said. It's going to get a good flush. Not black, it's not what I wanted. Got a big flush lower. And then we say we bounce back up and then sell the rally. That's pretty much all I'm looking to do. And if I don't place a trade today, I'm okay with missing it, as it's pretty good the last few weeks. But that's all I have for y'all today. Be patient today. Be disciplined. Don't let FOMO overcome you. There will always be tomorrow. Let the trend be chosen today, and then just pick it up tomorrow. Have an awesome day, everybody, and see you again tomorrow. Take care.